So how do I trade with no opinion? So this is a jam. Let's go ahead and jump one ahead. So the discussion, I think the discussion today, and it'll certainly be fascinating to hear your thoughts of, does my trading always have to have a directional assumption? And I'm going to just briefly give a little spiel as to the way I look at this. If I'm buying something, sure, I want it to go up and not go down. But am I buying it because I think, like we just said, it should be here and it's not? Never, because the should be doesn't really figure into the equation. What I'm looking to do is take that 50-50 bet around a static delta trade, a binary event of the market goes up or down, and trying to move that out a little bit. So, you know what? Having no opinion means we're trading neutral strategies. So looking at a range, and you mentioned one of the challenges with Bitcoin, this unbounded range of not quite knowing, because of the uncertainty, the challenges around liquidity, the volatility. The normal way to try to construct neutral strategies around a range, and a neutral strategy doesn't mean I can't be long or short by definition when you trade your long or short, but the idea of finding opportunity within tradable ranges. And those tradable ranges statistically start to give us a little bit better edge on that 50-50 movement. And I think SPRE's a good one to talk in. And because probably consistently SPRE trading in this range this year from between 70 and really 75 and 80 has been probably one of the most consistent. I think Tony Batt uses this term, rinse and repeat trades. I'm going to trade the range until the range doesn't trade me. And, I'm going to force the market to prove me wrong. And I don't think this goes back to the market should be here, but I'm going to take what the opportunities in terms of normal daily movement and statistics, move that 50-50 ball and start talking about neutral strategies. Now, I'm curious because neutral strategies in my mind in the options world are something that might be different. How do you view that, and how do you take that into the world of futures?
Well, I always, when I think of the first thing I think of, if I think of a neutral strategy, I think of, either selling a strangle or maybe a iron condor or something like that. And I mean, looking at this, I feel like it would work in this type of situation as far as options go. But before I go further, and I've looked it up before, but I want to be clear on SPRE. What metals does that entail specifically, or is there certain ratios, or what is? Tell me more about the product.
Great question. So SPRE is small precious metals. So it's a combination of gold, silver, and platinum. Now, it was actually weighted as to how much is produced every year, and gold by a dollar amount it's by far the largest contributor, making up slightly under or slightly over 50% of the index. I want to say 58% right now. Silver, a smaller component. More silver is produced every year than gold in terms of weight, troy ounces, but not in terms of value, because we're looking at $28 silver and we're looking at $1,900 per ounce gold. Platinum, sprinkling of platinum in there. And when I say sprinkling, less than 2%. And the question, well, why do you even bother putting the platinum in? Well, platinum is a precious metal and it's a high volatility metal. So when we start to offer options on futures, we're going to have a premium rich environment to trade. So a holistic exposure to the precious metals market, understanding the components and the weightings, part of product knowledge and product understanding. Do those ratios change? Do the weightings change? Now, there may be a rebalance in the product depending on the relative price changes in the two products. That happens in June. There will be no rebalance this year. The market hasn't diverged enough to cause us to change, and when I say us, the small exchange index committee, to change the weightings. So it's this holistic exposure to gold, silver, and platinum.
Yeah. Okay, cool. So knowing that, it's interesting. I would say in a previous life, looking at this and knowing that there's so much gold in it, I used to be a huge gold bug. I mean, big time. And I might still be a little bit, but I, especially knowing this environment, I would, in the environment being that The dollar's been depressed again. Just to reiterate, I do have a dollars futures trade on right now that I'm long against the rest of my portfolio of stocks. But being that the dollar has been depressed and being that this is largely, or I should say more than half, 50% made up of gold, I would think of appreciation in gold in this current environment and look at this as a situation to buy the future. That's what I would think, but again, I wouldn't be beholden to that idea now. And I think that's a big difference. Like I would have certain brackets, like you said, what Tony's talking about, you'd have certain ranges. And if it falls out of that range, I close out for a loss. And, if it gets above the range, then, I'm somewhat interested to a point and whatever that may be, whether I feel like it's 2% or 3%, but that's kind of how I look at it, now versus having a strong opinion. I think that was something that was not negatively impressed upon me, but it was impressed upon me early on in my trading. And it was like, okay, this is the current situation with the dollar. This is the current situation fiscally. I think gold is about to go. And exactly the type of people I'm talking about as far as traders. Like that's how it was. Gold's going. I'm getting long right now. I'm getting long like $30 delta cost of the upside because it's about to explode. And there's been times where it worked and there was times where it didn't. And as far as options go, but that's kind of how I would view this trade differently now. And I would view it within those ranges. And I think this is neatly laid out as far as those ranges because it has traded within a range for quite some time. It's undeniable. Oh, wait, Pete, you're on mute, buddy.
Sorry, my dogs are
talk to me or what? What's going on?
My
here?
dogs are freaking out. You know what? 11 pounds of dog, about 80 decibels of noise. There is something wrong with that equation, but nonetheless, it exists. So we've talked about having no opinion and what that means. John, let's jump to the next slide. So walk us through this idea of, and you did a wonderful job here. Neutral strategies and futures mean price action. So it doesn't mean I don't want anything to happen. A trade with no opinion doesn't mean I don't want anything to happen. I have no opinion on direction. What it means is that you want this trade to, again, and you mentioned this, I don't want it to, and I'm mindful of that 2 or 3% above or below where I've been trading it, is the market is challenging the existing range. And I want to see if it sets a new range or it comes back in. And I'm going to manage, those expectations in that position within a reasonable price range. So price action is the important component. And I look at price action independently of direction. And that I find to be opportunity. In terms of price action for you, and John, let's jump to the last slide, because this is important. Talk to us about price action, Jermal.
So price action means buying and selling based on how current prices relate to historical prices. And, it's funny because I've been guilty of not being that great at this more recently. I've had a Boeing ops call spread on feeling, and it was, I did it the right way. I mean, I did it around, my break even was around where the current stock was at the time, but Boeing is definitely another one that's been trading in a range as well. Right. And so it hasn't worked out to no avail. It has not worked out. But this is a good reminder of how price action works, right? Like it can be within a certain range across a certain time period. And you have to be mindful of that because otherwise there's a lot of times I'm sure as traders, we're anticipating for it to break out of a certain range and maybe it will at some point, but you have to trade what's currently in front of you, not what you think is going to happen in the future or something like that.
I think you've summed that up perfectly, and
I've dealt with the pain. That's what,
and that's a great point. The pain of sticking with my shorts at the upper end of the range. The market will tell you. The market is the perfect conduit of what is the current tradable price, and by having no opinion and trading this range, we're letting the market challenge the existing price structure to determine whether or not we're not anticipating that. And I so many guys starting out in the process are like, I'm waiting for the break. I don't think you are like I am. We're not momentum traders. I don't want the breakout to buy more. I think 30 years ago when I first started, the markets were much thinner. Momentum trading was A lot of guys had a lot of success with it because there were a finite number of participants and the ball could get rolling. We live in a different world of global participation and markets price much more efficiently. So, you know what? This was just a great walkthrough, Jermal, of sharing your insight into how we look for a new set of opportunities. And I think we're all very, very appreciative as you guide us through this process of finding not only the ability to trade product and diversify, but strategies within it. And thank you so much for taking us on this journey and continuing to pull everyone into getting productive within and finding comfort and opportunity within the futures world.
Oh, thank you, sir. You're a consummate professional. It's always great working with you. I appreciate all your knowledge. This is great for me too. I'm enjoying it. So let's keep the ball rolling.